on the ground view, not an ivory tower view, because they're very different views of what's going on.
I would read what other people were saying about the housing market, and it didn't make sense to me based on what I knew about mortgage. It didn't make sense based on what I knew about inventory, what I had seen, what I knew about the institutional investors that actually did get us out of that crisis in 2012. Whether you like them or not, that's what happened. Also, I knew about the speculation that was in the market that had really started, honestly, in the late 80s. And this is what I think so many people don't understand, is that both of these booms have been about speculation. And so do we have a housing shortage? No, we have an allocation problem. And so we'll get started with some alternative data, but I should mention that I went out when I couldn't understand what others were saying. I then drove all across the country to visit these markets myself. And I would drive the perimeter of the entire town and then go through the downtown and look at all the different types of housing, including multifamily, short-term rental, the new builds, the existing neighborhoods where the institutionals had bought up, but were beginning then in 23 to start selling. And now they are fire selling in many cases. And comes from the top people, was in the room with them in September. As soon as these things are getting leases up, they are rehabbing them and sending them out to sell to their agents. They are getting out of these neighborhoods, which is why you're seeing price corrections in places like San Antonio, Atlanta, etc. We'll get started. When I got back from the road, I had to dig into the data because I couldn't understand why what I was seeing wasn't in the permit data, wasn't in any of the data. And so I had to dig into multiple data sources to try to understand, and also understand in many places across the country, if you're in the unincorporated area, you don't need a permit. And the other thing is that what happens is a lot of national builders come in, but they're not aware of the regionals and the locals. And it's sort of, people just don't go down the street and see that, oh, there's a whole new built subdivision right there, and then another one, and then another one. And so I was telling John, I will offer to take anyone around Florida, because I spent several months down here in 23 and then came back over and over to see what was really going on. And if you think there's a shortage, I can take you to some places.
Yeah, you just have to open your eyes and look at all the for sale signs around all the new construction and then all of the price drops. I mean, obviously, if a builder is going to give a $50,000 incentive to buy down your rate, that house is overpriced. And they're giving these massive incentives, sometimes over $100,000, $200,000 off on new builds, because it's just become so unaffordable to the next generation to be able to purchase here, which is what we agree with the other speakers, is the affordability crisis is absolutely real. Living on the ground, I've sold billions of dollars of real estate, residential real estate, underwrote it. It's really bad. It's way worse than you could possibly imagine. There's a report that came out the other week, 37% of people's income now goes to shelter costs in Florida. We're ranked the worst in the nation for an affordability issue. And this did not just happen by accident. This actually happened over a longer period of time. Some of it, yes, was underbuilding, but that's not what's happened recently. That's actually the opposite. Right now, we have an oversupply of inventory in Florida in specific pockets. It's not everywhere, but there's pockets that have so much supply, and the builders overbuilt. We have to finish their projects, and sometimes it takes 3 to 5 years to finish their projects. And this inventory just that they have to finish the job. And so behind us, you can see the major factors driving real estate. We're not going to dig into each one of them because you can read them. But it's important to think about these 8 different categories that I do independent research on, that Melody does research on. And then we feel like we owe a duty to report on what's actually happening, because we want you to know that as policymakers and people in the industry to see a different side of it that maybe isn't an ivory tower view. I own a company that has 280 real estate agents throughout Florida. They sell a ton of real estate, 600 million last year. We see what's actually happening with the consumer every single day, with the sellers every single day. Short sales are rising, foreclosures are rising. So we're going to show you the data that's a little bit different from the data that you saw previously from the other speakers. Is that okay? You want the other side? Or you want to keep hearing about how we have a shortage?
Yeah. One of the things that I started learning about the data, like I would see things like, oh, listings for sale. Well, who provides the listings for sale data that you can get on the Fred website? Does anybody know? Realtor.com. Okay. So I started digging into all of the data and realized that we were missing so much And it did not match what I was seeing on the road. But anyway, it depends on which data source you use. So I'm sure all of us remember when we took statistics when we were younger, you could come up with a stat to justify pretty much anything, right? You've got to go out there and look. And so this is a different view of, as people always talk about this time period after 2008 where there was no building. Well, we had overbuilt. We also, just our household size is gone way down, and that is because of the investors in the market. And Florida also has a very low owner occupancy, which means who owns those homes? The majority of the homeowners are older Americans. They will be exiting that market. Charles Schwab did a study and said 70% of people that inherit properties sell them. And we know this affordability crisis means that no one, like young people, can't afford to maintain these massive homes that not to use but the boomers are living in, right? So this is kind of a different view of that. This comes from the census, and this is housing units as a percent of population. Because the way that people look at the building schedule, I think it gives a view that's a little misleading. And in population and number of people per household. So this has just been going down. Now we're seeing that firm up now. You're starting to see that, essentially increase, those numbers go up because of what the previous speakers have talked about, people having to move in with their parents. And then here in Hillsborough County, so you can see, this is the permit data. And again, the permit data, this is a big mystery to me. I don't understand why it is so off. But you can see there's not a supply problem here. And essentially, when we got the V25 of the census estimate, it showed Hillsborough is actually 7,000 less people here. We'll be getting the updated new city census estimates here. Do you want to add anything, John?
I mean, just from an on-the-ground view, you guys use Zillow, right? We get clicks on Zillow as real estate agents, and then we go show them houses and sell them a house. Clicks on Zillow are down 50%. The demand is dropping very rapidly from people who are migrating to Florida because of the affordability crisis. Young people are opting to go out to the Midwest, other areas. Also, Florida's middle class is a lot thinner. There's not as many jobs here that are really high-paying, well-paying jobs. And so that's another issue that we see with the Florida market specifically. We kind of have a two-class system. We have like very wealthy and then the working class at, $15 an hour. And so how do you build housing to support those $15 an hour workers? We're seeing a lot of them move out to the suburbs, to the exurbs right now. And that's the issue. So when I see the information come and say, the young families are moving here, we are not seeing that at all. We're actually seeing the opposite. The average home buyer is someone in their 60s who bought a house 20 years ago, has a ton of equity, and now is selling that house and buying another house. And they don't care because they have so much money. So it doesn't matter to them. So there's also a wealth divide in Florida that absolutely impacts the real estate market, because most of this product we're building is, high-end luxury, like 700,000. And those are the price points that are getting stuck and they're not selling because there's no next buyer who can afford it. And the only people who could afford it were people relocating from New York, New Jersey, California. They're not coming. They're not coming anymore, because what we had was, we didn't have a housing shortage. We had a demand shock. So what we had was, during COVID, we had tons of people from the Northeast, from out West, who relocated here all in 3 years. It basically brought 10 years of demand within 3 years. That's not a shortage, that's a temporary demand shock. Builders caught on, started building like crazy, speculating like crazy. Obviously, prices went up over 45% within a few years. And now that demand that was pulled forward is leaving a gap in the marketplace for new people relocating here because they already moved here. And the people who could buy here already purchased. And the new people who didn't buy yet, they're priced out. And that's why we're seeing record low number of pending sales. We'll show you the data, record number of pending sales, mortgage applications, all of this. And so now we have a glut of supply and demand falling at the same time. So if you're thinking about this from a political standpoint, what's this going to do to my tax revenue? Because it's going to be a big play, especially with what we see what's happening to these tax proposals that are out there, which we don't have the details, so we don't know whether to be for it or against it, but hopefully sometime we'll get the details to be able to determine, okay, what does this actually do to the market?
Yeah, and just to be clear, all of the cities across the Sun Belt states built as if every Californian and New Yorker was moving to their city. And they really believe that. But when you look at the math and the fact that relocation has really gone down in general because people can't afford it, That's not what happened. You had a lot of temporary workers come to the Sun Belt states to do that construction and all the activities around it. And it was one of the only places where they could work. Like if you were living in Illinois, you would come down and work in hospitality because the South was open. And so there was a lot of temporary migration. But this is all over the country. California does not have a shortage. I spent a lot of time up there driving around, but we'll keep going. This is just a visual of the supply. So and then, so here, this is what I would encourage everybody to do, because I think that when we talk about housing, now you guys are a little different because this is the thing, but most people don't think about the housing as like holistically, like how many build to rent do I have? How many new homes? Because the new homes are not all on Zillow. Just so you could use new home stores. They're much better at showing how many, but I've even seen when I go to a new build community, they'll say on new home stores, say 10 properties are for sale. In reality, you get there's 200 properties for sale.
It's true, and they don't put it in MLS, they only put one or two models in MLS, so all that built up inventory is not getting into the data.
It's not in the MLS. And that's what I realized when I went out to these new build communities, because I would see Zillow and I would be, what is going on? So I had to dive into all of this. So this is like a little template that I would tell everybody in your community to look at. So you can see here in Hillsborough, you have 8,882, and that's from AirDNA, and that data is probably understated. But the big thing that I want people to take a look at on this slide is the number of deceased owners pre-probate. Because this is the other side of the equation, right? We're going to be losing a lot of folks. We've talked a lot about demographics already this morning, but because these are our homeowners, they're our homeowners, right? And they also own the long-term rental properties. They are going to be exiting, unfortunately, and we'll show you, I think Harvard.
The only thing I want to say about this is when we're looking at inventory from a sale and rental perspective, we're experiencing a phenomenon called rage quitting. Anybody heard that term before? The seller will put their house on the market, they won't get the price they want, they get upset, they blame their agents, and then they fire them. I've been there, our agents have been there. It's not the agent, trust me, it's your price, it's always the price. It's the price, in case I didn't say it enough times. And so they take that property and they list it for rent because they're not willing to acknowledge the market reality. So when you're looking at inventory that's available, you need to combine the rentals plus the listings for sale on MLS. But here's the thing, 50% of the rentals are not on MLS. They're off market through self-listed. So we don't have a true inventory view of how much actual inventory we have. And I see some nodded heads, so I'm glad you guys noticed that, because I think it's important nuance for people to think about. You need to combine the data sources to see the true vacancy in the marketplace.
Absolutely, and I'll quickly just touch on the delinquency before we go to the demographics. So obviously I come from mortgage. What I'm seeing in mortgage servicing, all those years I spent trying to make sure Dodd-Frank was implemented. Well, I had to come to a very helpful realization that we had speculated again, except for government moved into the FHA program, basically doubled it. And so investors use this program. The Philly Fed did a study in 2023 where they talked about, hey, investment didn't stop after 2008. In fact, it kind of ramped up. This is big HGTV, fix and flip shows. I mean, this was a nationwide obsession, really. And so, but what they also said is fraud didn't stop. And so you have a ton of owner occupancy fraud, and this is something I see in mortgage all the time. So you have investors using the FHA program, getting that 3.5% down payment, very low skin in the game, so they'll walk away immediately when it's over. I saw that all during the last crisis. And so what we're now seeing is the delinquency in FHA is over 13% delinquent right now. And you're not hearing about it because there was a crazy loss mitigation program where people literally could just keep going. They would miss 3 payments, they would go back, and they would get what was called a partial claim to be put at the back of the loan, not interest bearing. And you could do that up to 30% of your UPB, and they just kept doing it over and over again. There was no cap. And so some people would not even pay for the first year. We're seeing that. There's a ton of fraud in the system that talk about who's swimming naked. We're just beginning to see it because foreclosures were suppressed for so long. Title reports weren't run. They're just now entering the delinquent cycle. So people are starting to see this. They started seeing it in bankruptcies first. They're not in first lien position because there's also a whole which I just quickly talk about, there's a lot of seller financing that's happening out there. There's a whole private shadow market because of the high rate situation. And so you had a lot of investors participating in that shadow market. We have none of that data. I mean, cash splits.
Yeah, don't get me started. You can share this if you want to later. I'm gonna move forward through this.
Yeah.
The demand demographics.
Right. So essentially, it's just not the picture of what folks think. And because of the silver tsunami, as we call it, at Harvard, we're gonna lose 15.6 million boomers by 2035. By 2050, it's another 26 million. So this is I would love for the story to be young families are moving and getting jobs, but the real story that everybody needs to focus on is first you need to assess your market. You need to drive around, you need to really understand what inventory, because the other thing we have in America, believe it or not, is a massive vacancy problem. And you can see vacant homes all over the country, and there's a lot of second home ownership. But what folks never did is really look at their cities and say, hey, how can I fix this within the city? Instead, the builders a lot of times just went out and built, and the exurbs, et cetera. And in places, guys, they built the places that I had to go in 2012, they just went into those same areas, and we're going to see a very similar level of stress. And so, John, on this.
Yeah, don't get me started on this. I did the math back, like envelope math. About 70% of boomers own a home, 15% of them own multiple homes, and 70%, like you said, according to Charles Schwab, will go out there and plan to sell their house when they get it in the state. Well, 22% of Florida is a boomer or older, and when they sadly pass, these will go to states, they'll be sold. So the question is, how much inventory just by the amount of deaths that we see of homeowners over the next 20 years, how much inventory will come to the market as a slow drip over the next 20 years? I did the math at our current rate of active listings. Anybody want to take a guess? What percentage of active listings will come every single year based on the estimates?
25.
35 to 40% added. So you have to ask yourself, where's that extra demand going to come from?
Right.
So it's not going to be a one-time event that happens. It's going to be every single month, a little more inventory, a little bit more inventory, a little bit more inventory that comes onto the market because of this demographic situation. And it's going to impact demand. And a lot of these houses, someone said like there's a remodeling boom. I think it was Leslie, 100%. Yeah, we're seeing that. People are staying in their own homes.
Yes.
They can't afford it. All these homes that'll be coming to market. That's a great place to be in the market from a business opportunity.
Yeah, and some of you mentioned that rage quitting, but also the cancellations, record cancellations we're seeing in home sales. And what it is the property inspections, because people didn't do repairs for multiple years because they couldn't afford it because of inflation. At first, they couldn't get the workers, and then it became, I can't really afford it. The other thing that Fannie Mae did a study, 55% of appraisals, they looked at 7 million comparables across their book. 55%, they said, overstated the appraisal. They didn't properly list the seller concessions. This is some of this alternative data that we really try to look at to tell the story.
Yeah, sales price does not tell the same story. We're seeing $30,000-$40,000 in seller concessions, and they don't make it in all the way. And some of that is agent input too, right? When they put the information into the MLS, they don't capture everything. Okay, a lot of these people are part-time. About 90% of the agents in Florida are part-time.
And I should, that's such a good point, that is it really going into the MLS? Is it really correct? And also with new home sales and the permits and things of this nature, a lot of that is based on surveys by the builders. So it's important where the information comes from. So I don't think we have to.
This was probably already, fertility rate. This is one of the issues we see domestic migration downturn. I think this was already shared on another slide, but obviously we're seeing net domestic migration slow down simply because we have an affordability crisis here in the jobs. The wages for what you're paid for what the shelter costs is just don't make sense anymore. It used to make sense, by the way, back in 2014. That's when I moved here. Okay, cool. We'll be moving quick. Thank you. The numbers don't make sense. So we don't have as many people migrating to certain areas of Florida that just got priced and over speculated. Here's the migration shift. Obviously, we're down about 93% in net domestic migration to the area from the peak, which is what I think builders just thought was that this demand would continue forever, and it was a temporary shock. And the reason I know we're not in a shortage is because we weren't in a shortage in 2019. We just weren't. It was a demand shock for 3 years, and then the builders went crazy, the speculators went crazy, and by the way, It was the mom and pops who really caused this. About 90% of the investors are mom and pops in Florida, and they gobble up 5, 6, 7 homes. I know this because I live in a country club and everybody there talks about all their investment properties. And they're actually a bigger issue than the institutional buyers. I'm actually a fan of the institutions doing the build for rent and other type of products.
Yeah, that is the issue. And so you can actually, when I would drive to these new build neighborhoods all over the country, you would go in and you would see immediately a for rent sign. Because they put people on buses and brought them down to the south and said, you need to invest in this property. You need to do a build to rent. Buy this build to rent home, rent it out. But the problem is, even back in 23, I could see a for rent sign and a foreclosure because essentially there was nobody coming to that new build subdivision. Because as also in that first wave, you had people coming out to the exurbs because it was affordable. But now you're emptying out the existing in the cities, and that's actually starting to get more affordable. And as gas prices and all this, people are gonna come out of those new build subdivisions back into the existing neighborhoods as things get a little bit more affordable. So just a lot of misallocation.
So I'm gonna go through this because we still have some more data. So this is the demand index. I like this index because it combines a little different point of view of the demand indicators, pending sales, mortgage app searches for homes online, buyer sentiment. We're grinding along the bottom here just because of the affordability crisis. Mortgage demand is actually worse than the great financial crisis. This isn't talked about enough, but it's not great. And we're not even in a crisis right now. We have the worst pending home sales since 1995. Okay, so this is the other side of the story.
Increased population by over 20%.
Yeah, we're really seeing some headwinds here. And people ask me, what inning are we in? Because some people are like, I want to start investing right now. Real estate's very slow. It's an illiquid asset class. It can take years, it can take a decade for this to play out. But the demand is, what you need to know is that the demand is really slow and the supply is building. It's not something that's gonna happen overnight. So Melody, this is yours. Okay. So then it comes down to housing payments as a percentage of median income. This is nationally, but it's true in Florida too. It just becomes so unsustainable. You can see the prior peaks of where we are in the market cycle as a percentage. So this is just an indicator to follow when you follow fundamentals of, again, ask yourself, who is the next marginal buyer who's going to buy this piece of real estate? It's the number one question you need to ask yourself, because real estate's priced at the margins. It's not going to be the investors. The investors are actually selling their portfolios or trimming. They're net sellers right now. I had hedge funds call me to sell their entire 300, 400 unit portfolio because the numbers no longer make sense from taxes and insurance, etc. Why the housing market is frozen. This is why the payment to buy is just becomes so much more than rent. You can actually save $1,000, $1,500 a month by renting versus buying. As long as this holds true, I believe that prices will fall until we come back to reality, because we're not in reality right now. We're still in the zero interest rate policy kind of mindset where sellers are pricing their house at 3.5% rates, not 6.3%. And so it takes time for that adjustment period to happen, because usually seller delusion wears off in about 8 months of being in the market. Just be honest with you. No, okay. We're already seeing declines. So here's a happy chart. We're already seeing lots of declines. Properties are going negative equity already. So this is scaring off a lot of builders. A lot of builders have stopped starting new projects. They've actually just completely shut them off, which is a different perspective. And we're seeing some of the steepest home price declines in the country just because we had so much speculation. The numbers got out of control. And that's why you see the market coming to a halt here in Florida.
All sorts of good news.
Are you guys ready to buy some real estate?
Oh, thank you, thank you. Yeah, I think in driving around this area, you actually see this stuff too. So thank you so much.